get started. Well, thanks everyone for joining us for the Founders First CDC First in a series of 3 COVID business resource webinars. Our first of the 3 webinars are 3 key decisions to sustain your business in this uncertain COVID-19 reality. And I'm delighted to share that it's not just going to be me, your host, Kim Folsom, who will be moderating the session today, but I'm also joined by a host of subject matter experts that I'll give you an opportunity in just a moment to have them introduce themselves to you. But first, I want to go through quickly the agenda for our session. So if you could advance to the next slide. So for our agenda today, we'll go through an introduction, and then we're going to talk specifically, and the purpose for this webinar, we'll get a chance to meet the subject matter experts that are going to be joining me in this call. We're going to talk specifically about the CARES Act and the SBA emergency funding and the 2 particular programs. We're going to spotlight frame this around 3 small business scenarios. Most of them represented a number of people who registered for the webinar and shared with us a little bit about their profile. We're going to go into a deeper dive into the specifics around the actual program. Then we're going to go into an assessment that we're asking folks to be able to take on internally and externally as they look at how to leverage this funding opportunity to sustain their business. We're going to go into a deep Q&A session about the emergency funding, where our subject matter experts will share. Lastly, we're going to talk about highlight some other COVID resources, and then the last is going to be some closing actions. If you can advance to slide 3, please. The purpose of this webinar is to share some best practices about activities, initiatives, and resources to sustain your business during this COVID uncertain business environment. Additionally, we're looking to share specific insight and information to help you navigate the process of acquiring emergency funds to sustain your business. Let me share a couple of housekeeping items. First, we ask if you're not one of the subject matter experts, if you would please mute your lines. Additionally, we asked most folks to send us questions in advance of this webinar, so those are going to be the ones that we're seeking to uncover. And then the last one is, this is a very fluid process. While the CARES Act was signed last Friday, a lot of the service providers in the value chain are still coming up to speed with this. So, each of us have a role and responsibility in making this whole thing happen. And those service providers are, the banks, the SBA, other solution providers. And so they're quickly coming up to speed with what's the new reality. And so what may have been the situation on Friday may change by the time of Tuesday and Thursday and so forth. So some of your job as small business owners and solution providers are to, stay connected and stay up to date, because this is going to be an ongoing evolution of how this is going to be a successful outcome of sustaining your business. So please keep that in mind. Next slide, slide 4, please. So I am delighted to share that I am joined by 4 subject matter experts that are going to share with us some background about navigating this. I first want to take the opportunity to introduce Jennifer Barnes of Optima Office. Jennifer, you want to give us a brief background on you? Maybe, Jennifer, you're muted.
You're on mute, Jennifer.
Sorry about that. Hi, everybody. Jennifer Barnes, Optima Office. We provide accounting services from CFO to bookkeeping and HR. So we have been extraordinarily busy helping our clients navigate through all of the major issues that they're dealing with right now. and glad to be here as an expert, and anything I can do to help make anybody's lives easier, I'm happy to do so.
All right, thanks for joining us, Jennifer. And next we've got Beverly Cole, who's a former SBA executive and an independent board of directors for Bank OZK. Please give us your background, Beverly.
Thank you, Kim. Yes, I did work with the SBA in the liquidation of large portfolios. However, what is most important is that I still have relationships with the SBA, and I've been calling back to see how things are going. And I would also add, Kim, that being in the financial institutions, I've also called around to banks, and I hope to share some of the information that they have given to me as well. Thank you.
Well, thank you so much for joining us. Next, we've got Juan Carlos Hernandez from Cal Southern. Welcome, Carlos, and give us a brief background on you and your organization.
Good morning, everyone. Good morning, Kim. As Kim mentioned, my name is Juan Carlos Hernandez. I actually run the state guarantee program for Southern California called California Southern FDC. I have been in banking since 1988 and basically doing commercial and small business lending since 1993.
Well, thank you so much for joining us. And then we've got Karen Sobel from People Fund. Karen,
Hi,
tell us
everyone.
about you and your organization.
Yeah, absolutely. Good morning, everybody. My name is Catherine. I'm with People Fund. People Fund is a nonprofit community lender in Texas. We do small business lending and education all over Texas, and I'm just happy to help.
All right. Well, thank you so much for joining us. And I'm Kim Folsom. I'm the founder of FoundersFirst CDC. We are a nonprofit accelerator that provides programs to help grow small businesses. I wear two hats. I also am the founder of FoundersFirst Capital Partners, and we are a revenue-based funder and an advisory firm for small businesses. And so given this new normal, we put together pretty briefly this webinar to help address the state of some small businesses. If you can advance to the next slide, slide 5. So we're going to start with just 3 scenarios of businesses that may help relate some of these stories to you. First, we're going to look at a company. These are all fictitious companies, so we're not talking about a specific company, but JMI Graphics. This is an outsourced marketing and graphics company, and they service the hospitality and legal industries. Their annual revenues are $225,000. They've got a team of 5 that's made up of 1 full-time employee, 2 full-time, 2 part-time employees, and 2 contractors. And as a result of this COVID-19 global pandemic, their revenues have been reduced by 25%. We've also got another scenario, which is Taylor IT Tech Services. They're an outsourced IT service provider, and they service the food service chains as well as healthcare industries. Their annual revenues are $1,750,000, and they have a team of 21 made up of full-time, part-time, and contractors, and their revenues were reduced by 25% because of this COVID epidemic outbreak. And then the last scenario is DTX Solar and Heating, and they provide solar heating and air installation and maintenance services to both retail and government environments. Their annual revenues, and all of these annual revenue scenarios are as of 2019. Their annual revenues in 2019 were $8.5 million. They had a team of 45. The majority of them were full-time, and they also have 9 part-time and 15 contractors. As a result of COVID-19, their revenues were reduced by 40%. If you can continue on to the next slide, slide 6. So as I shared at the top of the webinar, on March 27th, President Trump signed into law the CARES Act, which provides emergency funding for small businesses across all states, including the Washington, D.C. and the territories. And these are, for the most part, long-term, low-interest rate loans. There's two specific loan products. There's the emergency injury disaster loan, which is targeted to sole proprietors and small businesses and nonprofits for under 500 employees that are eligible. The interest rates are 3.75% for small businesses and 2.75% for nonprofits. This is principal and interest is deferred on these for up to 4 years. And you can use this for, working capital to run your business. The loan amounts can go up to $2 million. However, if you apply directly, to apply for this, you have to apply directly to the SBA. This is not like some of the other SBA loans where you go through the banks. This particular injury disaster loan, you have to apply directly to the SBA. And for some people that applied and were approved, you may have received some interim $10,000, but the longer term amount of the payment hasn't been dispersed yet. The other program is the Payroll Protection Program loan, and this is available to all businesses and nonprofits under 500 employees. There's, unlike the economic injury disaster loan, they're not going to look at your credit score or your collateral in order to be eligible for that loan. The payments will be 6 months deferred, and there'll be some loan forgiveness. You can use these funds to cover things such as payroll, your insurance, rent, and utilities, and this will allow up to $10 million. For this particular loan, you have to apply through a qualified SBA bank. So, please know that there's two different pathways you've got to go through to apply for these loans. They are not the same loan, and it's a different process. If you can advance to the next slide. This gives you an example of if you applied for the economic injury disaster loan, you would go directly to the SBA website. Please know they have revised this package 3 times as of yesterday. So if you applied for this 2 weeks ago, your experience is different than if you applied for it last Monday versus if you applied for it Friday. And I anticipate that this is going to continue to evolve as they determine what's the fastest, best way to serve the small businesses. And we're going to hear a little bit more about that. Please advance the next slide. So we talked about 3 decisions you need to make. These relate to, 1, have you made the decision to apply for emergency funding? Several businesses have, but most businesses have not. So I encourage you, as a result of this webinar, that do look to apply for one, if not both of these. So that's one key decision. These funds are, ready for helping us small business owners to stay in business. And, that's really an important element. Secondly, you need to know what you need to do to apply for both these loans. It's a different batch of information. So please take that into consideration. It's not the same for example, the payroll protection. You're going to need to have information around payroll related information. Third, you need to be able to understand what can you do to maximize the damage to your business in excess of 90 days. Some framework, as everyone knows the statistics, 3 out of 5 small businesses don't succeed. The number one reason why most businesses fail has to do with cash flow and being able to have a sufficient amount of cash flow and runway to keep your business operating. Some of you may know my background. FoundersFirst is my 7th business. My 6 businesses prior, most of them were tech businesses. The advice for most technology-related businesses, especially if you happen to access alternative capital, is that you have 6 months or more worth of capital to operate your business. That's not generally the case for small business owners. Most small business owners may have 1 month, if they're lucky, to operate their business. The opportunity from these financing, these emergency fundings, are to provide you with this operating capital to run your business, but you're going to need to have the proper information and the support to do it. And that's what some of the information we're going to look to share with you today. So if you can advance to the next slide, I'm on slide 9. We ask you to do an assessment. First, you're going to need to do an assessment internally, and that has to do with budgeting and your cash requirement needs for 90 days. So that's really important. And I would even ask, not just stopping at 90 days, you might even look at what your cash requirements needs are for the rest of the year. The other is you need to have regular conversations with your customers and your partners about the state of your relationships as it relates to ongoing delivery of services. Some of your customers, their business may be halted, reduced, and so forth, as we talked about those scenarios above. You really need to know the status of your customer relationships. That is a responsibility of you, the business owner. Additionally, you need to be in the position of gathering financial information, both on your business and personally, and you'll need to connect with your service providers to do that. You'll need to determine the sources of incoming cash that will come from various sources, be it customers, insurance, savings, what have you, but really have a crystal clear picture of your cash that's coming in and the timing. You'll need to have an understanding of the essential resources that you need to operate or pause your business during this interim period. That's a critical minimum best practice, internal assessment. And from our experts, they'll share further. And then there's an external assessment that you need to be doing. On the external side, you'll need to regularly review the SBA bank local economic development related websites for funding updates, because as we shared, this has been a very fluid process that has been evolving each day. They're still figuring this out. Connect with local solution providers. We've got some here that's going to share insights, but be it your banks, your accountants, attorneys, service providers, development centers, CDFIs, like we've got some community funders to understand the scope of relevant support that they can provide you to help you with applying for this. You do not have to go through this alone. You should not go through this alone. Please, 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 if nothing you get out of this, know that there are people standing by ready to help. You have to be persistent. You need to be persistent. Don't just wait for them to come to you. You'll need to take the actions and reach out to them. Monitor those national and regional industry websites so you can find out what's happening specifically within your industry as well as your customer industry, so that you can understand and be able to react. And then the last piece I would say as far as your external assessment is make certain that influencers understand and know your story. There are, between politicians and other decision makers, that are going through and determining how to adjust this funding available to you. Don't assume they know your story and your situations. Participate in surveys, virtual town halls that will provide you with a method to share your story, gather information, and connect with emergency funding decision makers. And with that, we're going to open our Q&A session based on the questions that we've got. So we should be at the question, slide 10. And we're going to start out with looking at the internal assessment that companies need to do before they apply, or as well as if they happen to apply. And this is a question for our expert, Jennifer Barnes. What types of things should they be looking at from their internal financial health to be ready to apply for these loans, Jennifer?
I think what's really important is to keep your books up to date right now and making sure that you have accurate financials. So if you haven't closed your books for a few months, it's going to be hard for you to really understand what is my burn rate, how much cash do I need, what do I need to operate my business, what's my break-even amount. So making sure that you have accurate and timely financials, even your March financials should be done in the next week and a half. That will help you at least get a better gauge on where you're at. I think that since it's a little bit confusing because they said, well, you don't need to have your 2019 taxes filed now. We're going to extend it 90 days, but yet some of the loan applications are actually asking you for your tax returns. So if you haven't done 19 and you've extended it, then you have to go off of your 18 and 2017 taxes, which are, it's quite a long ways away from 2017. But I think when you're looking at your how much do you need and your financials, there's some really major things that you need to look at. For one is what's essential and what's non-essential. What do you need right now to survive, and what's just something extra that you've been doing. So you almost have to go line by line on all of your expenses and determine if it's essential or not. And then paying really close attention to your wages and breaking them up into a couple of categories. What's production, what's sales, and what is general and administrative. Now, if you want to keep all of your employees intact and you want to pay them the same, then getting that payroll protection loan is going to be important. And it's great that it can be forgivable. I usually recommend going to your primary bank first, who you have your deposits with, asking them, and making sure that you can give them an accurate idea of really what you think you need. Don't want to apply for a $500,000 loan when you only need 100. So it's really understanding where are your financials at, what do you need, and what's essential, what's non-essential. And then looking at facility, your rent, your utilities. The other one that you had mentioned was healthcare. What are your healthcare costs? So these are all essential things that you likely need to keep on paying for in order to keep your business operating.
All right. And just to follow on to that, I guess summarizing is you're going to need to put together your financials, and that's your profit loss, balance sheet, cash flow statement. And you not only need the current, if it is as of February and January, ideally, if you had a picture of what your financials were for March, that would be great. But additionally, you're going to need historical financial information, such as what your financial information looked like for 2019 and 2018. And you're going to need to be able to go through and look at some scenarios. Your bare bones scenario, and then being able to go to a next stage scenario. Maybe this is a mid-case scenario, and then a best case scenario, so that you can really have an understanding of that. And that you should consider, if this is not your area of expertise, which the reality for most small businesses, they utilize a qualified accounting professional to help with that, with making that happen. And you also will need to be able to provide your tax returns, be it 18 and 17, if you filed an extension on 19. So I'd like to next go through and talk about the application process for this emergency loan. And I'd like to be able to have this heard from a couple of perspectives. If we can hear from Juan Carlos from the perspective of the application process that they may need to, if they haven't applied. And then perhaps, Catherine, you can share what happens if they already applied and there's a change. So Juan Carlos, if you wouldn't mind starting that out, what do they need to do to start the application process?
Well, first of all, if we're talking about the Economic Injury Disaster Loan Program, make sure that you go directly to the SBA's website that has been designated for such. If you don't have that direct one, and I wanted to just kind of, as Kim had mentioned earlier, it is consistently changing. So even on the websites have actually been changing a little bit because of the fact that SBA has experienced several downtime as a result of crashing because of the high volume that they're receiving. The best way to do so is obviously make sure that you go to SBA.gov. Please don't go to any of the other, whether it's SBA.com or net or whatever, because at this point in time, there's a variety of different people that are basically going to look to see how they can scam you. So please make sure that you are on the government agency portion of SBA.gov. You will be able to find the link directly there. So that's the step one. You have to apply directly to SBA on that particular loan. Just so that you know, you still need your tax returns and your most recent financials available in order to be able to complete that. There are a couple of basic SBA application forms that have to be complete. So make sure you have that handy as part of what you're looking to establish. So ensure that you have that. Number two is if you're trying during the peak hours, please, keep in mind we're in the West Coast. This is a nationwide program. You have the East Coast that has 3 hours ahead of us. So make sure that you kind of go in maybe like in the off peaks from some of the conversations we had with SBA is to basically try to do it overnight from 8 p.m. to 6 a.m. in the morning. I know it's an inconvenience, but again, it's pretty much something that you're going to be able to apply for a low interest loan from them. One of the highlights for this particular loan is, as I'm kind of entered, you do have an availability to get immediate $10,000 from there. So far, the communication that we received from SBA is these $10,000 it is forgivable. So, I mean, as of right now, make sure you take advantage of it, because if it changes, you have to make sure that you really take on the opportunity right now. Two of the main things is if you are a small business and you don't have collateral, you're still eligible to qualify up to $25,000 in this particular loan program. If you do have collateral, obviously you can go up to the maximum value of either your collateral or the $2 million cap that they've put on this particular program. So this is an opportunity for you, again, to take advantage. Sole proprietors who may not necessarily have collateral for that much, or if you still choose not to pledge your collateral, even if you do have that available, you still have the choice to not pledge the collateral if you want to do so, if you want to pursue other avenues and you want to be able to leverage that collateral in addition for later on. Make sure that you at least take advantage of up to the $25,000 the opportunity that's available for you right now. I don't know, Catherine, maybe I can send it over to you. You can provide us a little bit more feedback on that.
Sure. So just to expand on what the loan funds can be used for, compared to the Paycheck Protection Program, Economic Injury Disaster Loan has a little bit more flexibility on the working capital needs that you have. Whereas the Paycheck Protection Program is pretty restrictive to payroll and payroll associated costs, some rent and utilities, and maybe a few other things. The working capital requests under EIDL can be a little bit more flexible than that. So any fixed expenses that you have, if you have inventory requirements, things that can be proven that are consistent working capital needs for you. Once you put in this application, at the end of the application, there's a box that you can check to be considered for that $10,000 cash advance. It is forgivable as long as it's used towards eligible purposes. Basically what happens is then your application gets into the queue. The SBA has disaster response centers that will contact you if they need further information, and then they'll either respond with an approval, a denial, or an ask for more information. There are a lot of people applying, so as we all know, this is a disaster that's kind of unprecedented in terms of the amount of people that are applying for these loans. So just be patient. At first, the SBA was promising a 1 to 3 week turnaround. Now it's looking like more to 3 to 4 weeks, but it could take some time as they're processing these applications. The longer you wait, it doesn't necessarily mean there's anything good or bad, but I have seen some quick denials. So I have seen those coming out. After you apply, disaster center representative will be in touch with you. From what I understand, once you are approved, if you're asking for more than $25,000, they're going to give you an installment of $25,000 first, and then you work with a disaster center case manager to get the rest of the installments and work out terms of the loan, things like that. We know it's 3.75%, no more than that, and that $10,000 portion is forgivable. But this is directly through the SBA, so you're not going to apply with any other lender, whereas the PPP you would.
Well, thanks so much for sharing that. And then to understand kind of the SBA's role and side with regards to this, Beverly, given that you're past employer there, as well as, you know, insights in your connection, is there additional insight that you would share for a small business owner, given some of the things that were shared? Like, for example, if you're declined, you know, should you reapply? If you don't happen, if you're expecting, like you're a business like, you know, one of the two that we talked about in the beginning, where you're running a company that's, you know, over $1 million in revenue or $8 million in revenue. So you're at your monthly, you know, expense level can be, you know, over, you know, $500,000. So in those particular situations, you know, if you are declined, what might you do to figure out, what might you do if you get declined?
Well, Kim, let me preface it by giving you some, responding to the question, and then also giving you some additional details. Number one, I've been told, because of the nature of the 2.5 times payroll, that is designated for the payroll protection plan, that folks, of course, realize that they've been using that, but they have been applying for both loans, and that is encouraged, the economic injury disaster. And that in that case, you really should take a look at your fixed costs and your variable costs, separate them out, and look toward the fixed costs for that payment plan. You have, the assumption is, of course, that you won't have the products or services that are there. I will say also that in terms of the application, the SBA, the applications in general, the SBA is requesting specifically the early time that was mentioned, but they also said between 1 a.m. and 5 a.m. New York time because of the system crashes. By the way, banks are getting on board, but they too are in a process of change. So the SBA and the banks are in the process of change, and patience is definitely needed. In addition, I've been advised to share that while the businesses are applying for these, particularly the economic injury disaster loan, that keep in mind that there is no guarantee, and realize that this is a package. So therefore, it will run out. It is important to participate to get anything out of it. The example of the company was given to me of a company in just the scenario you mentioned, where the costs exceeded, in some cases, the revenues, and they had some adjustments in their financials to help offset that problem. But they are applying for everything and anything that they can find. I do want to add that while we've looked to the federal government, there are some local programs that are coming on board, as well as some of the foundations and nonprofits are also asking, providing some service. Case in point for the SBA, however, when looking at the application, read it carefully. Take note that at least for the economic injury disaster loans application, I'm not sure about the paycheck one, the time frame is 12 months before January the 31st of 2020, not your typical fiscal year. So, and they look to that for both the expenses and the revenues that are put on the first page. So just be sure you slow down and read it carefully, all of these applications. And again, when you get to any application and complete an application, hit that send button. Don't forget to hit the send button. And I cannot emphasize enough patience.
Okay. Well, thank you so much for sharing that, Beverly. Catherine, I'm going to circle back to you. With regards to some of the businesses that you've seen that have been declined, what have been the advice and actions that you've told them to do?
So there was a question in the chat about the EIDL being the same as the CARES Act. And although they're all kind of rolled together, there are going to be different requirements for both the PPP loan program as well as the EIDL. So if you're declined for one, it doesn't necessarily mean that you're going to be declined for another. There's also going to be some local assistance around. And then there's a few different companies and more each day, public-facing companies, Facebook, Bumble, Hello Alice, that are coming out with grant programs. So my best advice would be to look into all of the funding programs available, estimate which ones are going to be a best fit for you. Don't throw all your eggs in one basket, and work with your local service provider to figure out what the application requirements are, what the eligibility guidelines are for some of these other programs that are possibly out there. And don't think that just because you've been denied for the EIDL that you might that you also won't be eligible for PPP. They are to be used really for two different purposes, and you can't double dip on funds. So it's not like you can get double funds by utilizing both. So I'm happy to share any of those resources with the group here as well.
Okay, well, thank you so much for sharing that insight. So just to recap, these are two separate loan programs. The emergency injury disaster loan program is one, that's for working capital. They are going to look at your financials for the period of January 19 to January 20, to see what your qualifying expenses might be. That you need to make certain that you've evaluated the loan application carefully, and you submit that onto the SBA's website, and recognize that you have a better chance of doing some late night submitting after midnight than you do trying to do that application in the meat of the day. The second funding that's being provided is what's called the Payroll Protection Program loan, and this is specifically for payroll-related expenses, insurance, as well as it covers some of your rents associated with that, but it's more for your fixed payroll expenses. And if I were to ask Juan Carlos, do you have an idea as to when these loans might be available to the small business owner?
Sorry, Kim, as far as for the payroll protection program or just the additional
the payroll protection program, when that specific program will be available?
Well, the payroll protection program, you can start applying as early as tomorrow to your local financial institution. Obviously, we always want to make sure that we encourage business owners to go directly to the banks that they already have a relationship with, because of the fact that they already have, or at least the banks have a better understanding as to what they're doing. However, as we know, banks still have a particular, this isn't just, it's not a 100% guarantee for the banks to do it. However, you do have other institutions, other mission-driven nonprofit institutions that do have the capacity to be able to provide these loans for you at the same interest rate for the same purposes. And this would be one of the local ones here in Southern California. It's an organization called CDC Small Business Finance. I know there are several throughout the US, but always look for the mission-based nonprofit lenders that are SBA eligible. There are plenty out there, so make sure that you take advantage of them. At the same time, there are other avenues that you can take a look at. Every municipality is actually putting out a certain amount of, I shouldn't say every, there's many municipalities that are putting out some loan funds out there. The city of San Diego put something out there as well. I know there was a local membership organization that services the South County of San Diego. They also put a small portion of 0% interest loans for the restaurants who are hurting pretty quick. I know the city of San Marcos, Sacramento, San Francisco, they all have had some loan programs that they are making available for small businesses. So, you know, if just the fact that, you know, don't put, as Catherine mentioned, don't put it all just in one basket. Make sure that you diversify, hit every opportunity that you can. There's going to be plenty more grants that are becoming available. I know Verizon just announced that they're going to be putting a grant available for folks. So again, at this point in time, you really just have to maintain that communication line open, ask questions. This is definitely not a time to be shy or wait for people to approach you. This is a time to be more aggressive and save your business.
Okay. And so just to clarify again, this payroll protection loan, you cannot apply for it yet, but the expectation is that you should be able to start applying for that tomorrow.
Yeah, you can start applying for it tomorrow. The banks are going to they're going to try to make them as available as fast as possible. I've already received a couple of emails from some of our banking partners providing me with the information that that folks need to have, a little bit of just kind of like a quick information sheet along with the actual application. So banks already have that available. So talk to your banker at this point.
Okay. And for some of folks that may, you know, they do have bank accounts, but may not have a relationship with their banker, Catherine, would you be able to share specifically, are you guys going to be a PPP lender since you're a community funder, as well as, you know, if you don't happen to have an existing relationship with a banker while you do have accounts at your various banks, what might you recommend to the business owner?
Very good question. So I just want to start with reminding everybody that this was signed into law just on Friday. So we are still getting new information every day. And the infrastructure that it's going to take to roll all of this out on a national level is going to take a little bit of time to build up. So while there are banks that are going to be eligible to start making PPP loans tomorrow, we anticipate that the rollout of all of the eligible institutions in terms of becoming PPP lenders and being able to offer those loans will still take a little bit of time. So there are going to be some ready tomorrow, and then some ready the next week, and some ready the next week. I think there was some guidance put out by the Treasury that says all SBA lenders, certified SBA lenders, are eligible, but as a community advantage community lender, currently we have not yet received guidance that we are eligible in-house. So we are not able to offer these PPP loans yet. Once we receive guidance, we anticipate that we are going to either apply for eligibility, or if we are eligible, begin rolling out what these PPP loans look like. So we're not ready just yet, but we might be in the near future.
Okay, but very likely where you have your deposit institutions, those folks are the first batch that the majority may be online. So, you know, it's really important that you make a point to reach out to them and find out about how they are supporting the Paycheck Protection Program loans. And then the other question I would ask is, you know, what is the information may be slightly different than what was the emergency loan. So is there other places that you may be able to go to get, you know, more granular, detailed payroll information? And maybe in addition to our community lenders that are on, Jennifer, if you were to advise your clients on getting their payroll information for this, would there be a specific, like if they are using, be it outsourced payroll provider, would that be a source that you would recommend to get some of that granular payroll information?
Yeah, I think it's almost a case-by-case basis. One caveat I want to point out is that because some of these programs might take weeks or even a month to get funding for, that companies really need to be conscious of their accounts receivable and looking at their AR balances and how much cash do you have right now, how fast is money going to be coming in, how can you float yourself over the next couple of weeks, and really focusing on your receivables and looking at the clients that you're continuing to service and your customers, and are they being affected, are their customers affected? So really taking a granular look at each business for your receivables. But then on the payroll side, what employees do you have that are going to need to support your current efforts and your ongoing efforts? What employees have you maybe already decided to furlough or lay off or let go or whatnot? But in terms of your payroll specifically, it depends on, do you put everything very granularly into your accounting software? Or are you tracking this in, let's say, Paychex or Paylocity or Coastal or, there's so many different payroll companies out there. And so it's looking at how you're reporting your payroll, who's inputting your payroll, how are you putting it into your accounting system, and then are you actually separating it out of the, G&A, production, sales, and then really looking at it that way. I find a lot of our clients are just coming to us to do it for them. They're asking us to help them fill out the loan applications and basically put all the information in from the accounting system. So it's probably best coming from your controller, CFO, accounting manager, and if you're outsourcing, they should be able to help you. And a lot of us outsourced firms are all willing to do hourly support for small businesses that need help with their reporting.
Okay. I would like to ask a couple of questions. We talked about, in the scenarios, the larger companies that may happen to be LLC or an S Corp. What about the sole proprietors that represent, the lion's share of small business owners, be it the, individual consultant or the self-employed business owner? Can they take advantage of some of these loan programs, be it the emergency injury disabled loan or the PPP loan? And I will open that up to Juan Carlos or Catherine.
Catherine, you want to go?
Yeah, I'm trying to make sure I understand the question right. Can you repeat the last part of that question, Kim?
That there are sole proprietors that may not be an LLC or incorporated business. Can they take advantage of these SBA, the two SBA programs that we talked about, be it the PPP program or the or the emergency disaster loan program?
They absolutely can, and it really depends how they're structured. So if they're structured as a sole proprietor versus self-employed or as a contractor, it will depend on when they can apply, but it doesn't restrict what they can apply for. The PPP will cover owner's salary, from my understanding, up to $100,000, whereas the EIDL will not cover owner's draws, owner's salaries, just for employees. So it will protect a sole proprietor in that sense. Now, if you're structured as self-employed or a contractor, there is a delay on when you can file your application, and that is delayed until February 10th.
February 10th?
February 10th, but sole proprietors can apply as of tomorrow.
Okay, as of April 3rd.
April 3rd, correct.
Okay, all right. And then the other is, we talked about some alternative funding sources. We're based in San Diego, but we have a national footprint. If you go to the FoundersFirst CDC website, we do have some links there. One of the things is action items out of this session. If you want to advance to the next slide, we will be hosting other free webinars that will continuously share up-to-date information. Our next webinar next week will cover managing your team in this COVID environment. And specifically for this one, we're looking to have, in addition to a, HR subject matter expert, but a payroll company that will be able to provide information, as well as a traditional bank that will help answer questions around the PPP loan. And then we also, the week after that, on April 16th, we'll have one about marketing and selling remotely, because as us business owners we still have to run our business on an ongoing basis. If you go to the next slide. Some action items out of this. Our subject matter experts have done a fantastic job of sharing great resource with us. We will send out an email that will have links to their websites, to their contact information, as well as resources that were referenced in this webinar. We talked about some other funding sources that are offering small grants and no interest loans. So we'll be able to share that information with you. You'll also get an email request to ask you to consider participating in an optional COVID-19 business impact survey, so we can share your story about your business, so that it's used as far as with these decision makers as to the different categories. Additionally, we ask you, the action item out of this is to connect with your banks and service providers to find out about applying for this funding to sustain your business. You know, this so often not enough small business owners take advantage of this. So please, please, please make an action item to take advantage of these resources. And we allocated till 10:50 for Pacific time for this webinar. And so we're at that point. If you could advance to the next slide. We want to thank you for joining us for this webinar. We hope it was helpful. Again, look out for a couple of emails from us, one which will be links to some of these resources that were mentioned, including the ability to participate in an optional survey. So thanks again, and we wish you good health and safety in this current COVID time. Enjoy the rest of your day.
Bye, everyone.
And thank you to our wonderful subject matter experts.
Bye.
Thank you all. Have a great day.
Yes.